We're already beginning to see this, Kai. I mean, just like a balloon, it's going pop. That will collapse the US economy, the global economy. What then happens to government finances? The deficits just rocket. And the deficits are the primary source of collapsing the purchasing power of a currency. So that's what we've got, I'm afraid, in 2025.
2025 is closer than you think, and it could bring a seismic shift in the global economy. Why are central banks hoarding gold? What does this mean for fiat currencies, rising interest rates, and the Fed's growing debt trap? Alasdair Macleod uncovers the hidden forces shaping 2025, how commodities could take center stage, why gold is emerging as the ultimate safe haven, and the urgent steps you need to take to protect your wealth before it's too late. Don't miss this critical breakdown of what's coming and how it could impact you.
President Hoover, who preceded Roosevelt, was actually a big interventionist. He stuck his oar into everything. So the idea that this New Deal was government is going to, rescue the private sector actually was already being done by his predecessor. So here we have Trump, who's going to try and, New Deal and all the rest of it. And he'll be, okay, he's got control over both houses. Yeah, control, but you put that in inverted commas because you've still got congressmen and senators who are all in the pork barrel. They're all banked by, they're all sort of backed by the banks and so on, who pay their election expenses and their campaign expenses and all the rest of it. So what's going to change? I mean, I find it very hard to see what is actually going to change. I mean, politicians in opposition could say all sorts of things. Big difference was that the dollar was on a gold standard, at $20.67 to the ounce. This time, we are completely fiat. So the devaluation, which occurred in 34, when the dollar was devalued by 40%, is going to happen in the market. And I don't think it'll stop at 40%, but anyway, that's another topic. Other than that, there is a big similarity, and that is that in 1930, early 1930, Hoover signed the Smoot-Hawley Tariff Act into law. And there is no doubt, if you look at the trade history and all the rest of it in the 1930s, that was the big reason for the slump. Now, we also know that, money supply contracted by 40%, but that was banks and everything else going bust as a result of the mismanagement, first by Hoover and then by Roosevelt, of the economic situation. But the real catalyst in this, of course, was Smoot-Hawley. Now, today, I mean, that was, in those days, it was principally to protect farmers and things like that. But what happens when you introduce tariffs like that, say against the European Union, against China? They hit back with their own tariffs or their own restrictions in terms of needed, exports. So, I mean, China has already put a ban list on some of her rare earth exports to America. That's even before Trump's got into office. You're going to see more of that. But the other thing, which is worse, is that in those days, you didn't have these long supply chains. Today you have. And introducing these tariffs basically kills off these supply chains. It's a process which has been continuing actually since COVID, when the whole global supply chain system just sort of came to a halt. But that is a process which will continue, and that will drive America and the rest of the world into a slump. I mean, there are no two ways about it. And here we are sitting, sort of thinking the future is looking rosy. I mean, I read my newspapers and I see what the pundits are saying about the outlook for equities next year and all the rest of it. And they're all saying, they're all sort of saying that things like, well, tech stocks will probably, come off the boil sort of thing. But, the market's going to go higher over the course of the year. Probably not as much as we thought originally. I mean, this is nonsense, complete nonsense. This is a credit bubble. And I tell you what, just like a balloon, it's going pop. And that could be rather sudden. We're already beginning to see this, Kai. I mean, I saw a headline in the Wall Street Journal, I think it was yesterday, that there's been the longest run of falls in the Dow Jones index since 1984 or something.
Yeah.
5 days in a row, or 6 or 10, So I think this bubble indeed may be popping, and it's interesting. I'm sure we'll come on to this a bit more, but the FOMC statement yesterday, Powell, tried to sort of say, well, slow down on your ideas about cuts in interest rates in 2025. I mean, for goodness sake, I've been telling people that bond yields are going to rise. Now, what the Fed does with that, is a separate question. But bond yields are going higher, and they're going to go a lot higher. And we're beginning to see them break out on the upside again. I mean, certainly, if you look at sterling rates, you got a double whammy there, because you look at the chart of the long gilts, and they are soaring. The yield is soaring, which means that the price is collapsing. And sterling is also in a very, very sickly position. That is going down south. And I think it won't be terribly long before we see it back down to, well, there'll be a bit of consolidation at 120 to the dollar, then 110. Then I really think, unless this government changes hugely, and I don't see an IMF coming in as they did in the 1970s to tell the government what to do. I think at £1, $1, I could see that happening, and I could see it happening quite quickly too. It's amazing. Once a crisis starts, and particularly if that crisis is the popping of a credit bubble, and this is the largest credit bubble in recorded history, because every previous credit bubble, really from the 1980s, has been stopped from popping basically by pushing the interest rates down hard to the point where the zombies heave a sigh of relief and continue being zombies. The result is that you get an accumulation, if you like, of one bubble into the next bubble, into the next bubble, into the next bubble, so that we're now in the largest credit bubble in history, in recorded history. And when this one collapses, it's going to take out the currencies as well. There is no alternative. I mean, when the tide breaks on this one, what does the Fed do? I mean, basically, it tries to rescue what it can, because it's got a primary duty to rescue the government's finances, which incidentally is in a debt trap. It's got a primary responsibility to rescue the banking system, which will be suffering from all the bad debts in an economy as these zombies get wiped out by higher interest rates. And what are the banks doing? I mean, some of the banks are beginning to see this. So what do? They restrict their lending into the private sector. Or if they agree to lend something to the private sector in terms of providing it with liquidity, then it's going to be at a higher spread over whatever the Fed says, higher rates. So this is going to happen. I mean, there's no two ways about it. Yeah, of course. And I mean, you've already got the two largest foreign holders of U.S. Treasuries turning sellers. I mean, China isn't buying anymore. She's easing her position out. She's actually selling dollars to buy gold. And the Japanese institutions are in exactly the same position. They've got losses, if you like, on their dollar investments. They may have profits on the exchange rate, but they've got losses on the underlying investments. So they're not going to go and buy things out along the yield curve, that's for sure. I mean, if anything, they'll probably hold on to dollars, but, this is a currency game suddenly. And, the dollar is the king rat of fiat currencies. It's the least dirty of the lot. And on that basis, when things start going wrong for the dollar, the other currencies are toast. I mean, and that's what the charts are now telling us of sterling very, very clearly. I mean, you call them bond vigilantes. It sort of implies that there are people, deliberately acting in concert to determine the levels at which government funding take place. No, You've got a lot of scared people out there, and they're going to be a lot more scared, and they're not going to buy it. That is the problem. And I think that 5% yield on the 10-year US Treasury is first stop. After that, I see it going considerably higher. And I don't see how it can stop because of the debt trap. And not only that, but because of the trade policies, if they come about, and I'm pretty sure they will, not maybe quite the way in which Trump has said, that will collapse the US economy, the global economy. What then happens to government finances? The deficits just rocket. And the deficits are the primary source of collapsing the purchasing power of a currency. So that's what we've got, I'm afraid, in 2025.
Thank you for watching. As 2025 approaches, the financial landscape is changing faster than ever. If Alasdair's insights resonated with you, don't forget to like, share, and subscribe for more critical updates on gold, global markets, and protecting your wealth. What are your thoughts on what's coming? Drop a comment below. We'd love to hear from you. Stay informed, stay prepared, and we'll see you in the next video.